Not bad. Free is always preferred.
Hey everyone, it's Muck Bear for Muck on the Market. Here was Bonskew. Going to talk about the day, how the week was. Been a very shitty week for me. Down, went up from 18% to down about 1% up on this week. It's been a bad week for me personally. I was long a lot of GE puts, and then GE decided to spin off everything and still accomplish nothing. But I guess the market believed that that was good for the market, and then puked my puts. And then JP Morgan wrote an article about how this exactly will not do anything for GE, and then it sold off. So once again, just follow my tweet of if I make a call, follow that. If I close a position, get into it, and if I make a trade, just fade me, and you're good. Like, because
the usual.
Yeah, like, cause what do I know? I mean, apparently nothing. But yeah, and that's what's been going on for me. Was long some A and D calls going into day, and naturally the chips decided to crap the bed and puke those out for a little bit. But overall still up on the year to date. It's not as nice as it was before for me. What's going on in your neck of the woods?
Well, looks like the summer trade has started for the most part. So anything I'm touching is pretty much grinding slowly. Like, for example, bonds today have been a one-way trade with very minuscule pullbacks in between global peaks and local peaks and local troughs. But it bottomed out at 8 a.m. And, I mean, I guess it topped out at 3. So not a whole lot going on. The only market that's kind of been shell-shocking the shit out of everybody has been the energy markets. I know I wasn't expecting them to shoot up to 73 even at all. I didn't expect it to go up past 70 at all. So that's been the energy complex itself has been kind of the wild card, so to speak. There have been some folks that have been calling for the continuation of the energy rally, but with the positioning of the market and all of that stuff, I didn't think it was going to keep going higher. But apparently I underestimated the ability of OPEC to interpret what the market's interpreting by what they're spewing. So it's kind of one of those.
Go ahead. I was contrary to you on that one. I think a couple of weeks ago I went long USO. I made about 40 cents on it. Naturally, only just made about 40 cents and then closed up the position. I was like, oh, I'm good. But I told everyone that OPEC wasn't going to do anything. And
that's the funny thing. They didn't.
I make a call. I put the position on. I close out the position. You buy the position.
Right. And that's the funny thing. They really didn't do anything because everything that they decided on was already on the book, so to speak, in terms of production. There really isn't anything new that they did. So I guess the market was selling the fact before it became a fact, or selling the rumor and then buying the fact.
Yeah, you buy the rumor, sell the fact kind of thing.
Right. And it did the opposite this time around.
I just thought it was hilariously funny that before the OPEC meeting in the World Cup, Russia played Saudi Arabia, and like Putin and the king were sitting together. I'm like, I wonder what they're talking about. It's probably not soccer. And then OPEC came out and said, we're not going to do anything. Like we could increase, but we're not. And
we're not going to do anything.
I think they all want to see oil at 100. I think that's, it makes the kingdom a lot better. And like, honestly, it makes us a lot better. And, the Balkans and the shale, and, it makes sense to just try to push it there. As I've always talked about with a lot of people, is that the market tries to gravitate to where the most pain is. And it seems like the most pain is going to be to the upside to about like 85 here, maybe, pushing up to 100 and let people feel it. I know that well because I'm always on the side of the most pain. So another help for people out there watching is yeah, I always take the side that seems to be drawn to the pain.
Right. And that's the funny thing. You would think I mean, it was one point in time where the market was so long, and I'm talking about aggregate Brent and WTI futures. The market was so long that there was approximately like 15 spec longs or 16 spec longs for every one spec short, which is pretty ridiculous. But somehow the market doesn't care. So, I mean, I'm guessing that there are things going on behind the scenes that if you're not aware or privy to, like for example, there was, I can't even remember because I'm just not, I don't really follow technicals anymore. I kind of let that go. All of that stuff go years ago once I realized it really doesn't matter. So I don't really keep up to brush with it. But I was informed that there was a pipeline or something that was bust yesterday. I don't remember exactly where it was at. But it was like the Sinopec or something like that. I don't remember. Somebody told me about it. I think it was Shy Girl. And that is one of the primary reasons why we've seen this run up in crude. At least that's the storyline. Up until today, or at least from yesterday into today, or the weekend into yesterday. But as far as today goes, I mean, yesterday I was actually long puts in crude. And luckily I scratched right before, like literally 15 minutes before the market took off. And I was kind of kicking myself yesterday because I usually don't, when I get out of a position, I'm very, I'm either wrong or right. And I mean that in the sense that the direction is either going to go with me or go against me. And yesterday I should have known better than to ignore it because it went completely against me. And I got out right with no loss or anything. So I should have known better and I should have kept track of that market. I mean, that was $1,500 I basically let slip by. You know what I'm saying? Because that was a big move that we saw yesterday in crude from 67 and change all the way up to, I don't remember, it must have been 69 and a half or something crazy like that. I mean, it was a crazy move.
Yeah, I definitely feel you on that. Like when I take
Yeah.
like the AM
It seems like that, right?
like the AMD position I took yesterday. I just sat there watching it all day, and I'm like up 2 pennies, down 2 pennies, break even, and I'm like this should be moving way more than it's moving. I mean, I understand I had like 3 months on it, so a little bit longer dated contract, but still not really moving, just kind of hovering around. And I'm like,
Right.
I really feel like I should scratch this, but then I'm like, but no, like tomorrow we're gonna. I knew today we were gonna rally. I just didn't know that like it would be an awkward rally of no tech, no
Nothing.
semis.
Right.
And the same thing with GE. I was like, oh, I have all the news in my favor, and then all of a sudden they're like, oh, we're gonna sell off this division and that division, and I was like,
Right.
but you're still gonna cut your dividend and your stock's going to $9. I was like, just because you're selling
Right.
something like you, but I mean that
Doesn't necessarily mean anything's changing for the better. And that's the funny thing about stocks, right? And I mean, just markets in general. Uh, like you were riding those G puts from who knows when, and the market finally broke 13, and it was like everybody was waiting for 13 to break. So you had all this negative sentiment along with news baked in to the market. And then all of a sudden we see 13 hit, and then all of a sudden everything just changes after a few days. Like over a weekend, everything just kind of went boop, and it went the other way, which is exactly what will always happen when you're waiting for
well,
something to
it was
pan
like
out, and then
it
it
was it was
pans
like
out.
13
Like, look at
failed,
this.
13 failed, and then it broke its 52-week low, and I was like, okay, cool, because you never buy a 52-week low breaker.
Right, right.
So I was riding that, and then like of course the market closes, options are locked, and then they're like, oh yeah, we're selling this and we're selling that, and I was like, but you still
Of
can't
course.
facilitate you still can't. I was like, in my mind, I'm like, but they still can't facilitate their debt without cutting their dividend. They finally got kicked
I
out of
mean,
the
even that
round.
won't help them. But
I get it. And then I wake up in the morning and it's like GE's up 77 cents. I was like, why am I the only one who gets this? And then I really realized that like it doesn't really matter because the news looks good. And the news can look good
Exactly.
longer
And
than
that's
I
what
can.
price is gonna react to.
Yeah, and the news can look good longer than I can stay liquid. And I was just like, thank God that
That's right.
when it broke its 52-week low, I did cut a lot, like half my positions, and let the other ones ride. It's just the profit that I made on cutting half of them got wiped out by the losses. I mean, oh well,
Yeah, the premium.
that's what happens. If it
Yeah,
rallies
that
over
that's beta
14, I'll use it to buy more. I'll buy
Right.
more 13s and I'll buy more 14s. Um, trying to roll out to longer dated and just deal with it. But it's funny, like I feel like it's a stock picker's market now, and it's all about
Seems to be
like
the case.
trying to find like deep value. That's where you can. Um, because I mean I don't really feel good about growth right now. I mean, growth is a good place if you can stomach the volatility for it, then you're stoked. I mean,
Right.
if you can be in the Apples and all of the Amazons and the Facebooks and Netflix, and you can handle 20-point rips and um you know moving up and down maybe 100 points in a week and ending at flat. I mean, if you can handle that, I don't then that's where you're at. Like right now, I'm tending to look towards deep value um, that's been oversold. Some of the banks look
Mm-hmm.
okay. Um, the banks it's a quandary too because no one really knows what's going to go on with Deutsche and that situation,
Yeah.
and how much cross exposure everyone has. And I still think City's going to 100, but it's been a long term position of mine. But you know, once again, UK bankruptcy laws are quite different. Everything gets marked to market instantly. So if you're a counterparty and you haven't laid off, I'm assuming people have. Talking to Greg, he was watching XLF a couple months ago, and someone was making huge buys. I mean, huge like sells and buys and puts on the XLF.
Mm-hmm.
So I mean, maybe someone is hedging their exposure that way. But
Right. Sounds like synthetic calls,
yeah, it sounds. I
which
mean, just making sure that your book is taken care of in case of
I mean synthetic put.
yeah. So I mean, we'll see what happens. There was some big buyers of the TVIX, and now I'm assuming they've made a lot of money since they followed. Which also I don't know the rules on the TVIX, but I feel like they double split, like double reverse split like every 6 months. They're like, oh, okay, it's
I
at
do
$5,
not pay
$50,
any
$5.
mind to those vol products because they're just a trap. I mean, if they're short and you're making some money, great. But you get comfortable in that kind of scenario
Weapons of mass
and
destruction.
complacent. Those are the true weapons of mass destruction.
Yeah.
Those are the weapons that even Buffett won't touch. He'll touch CDS, but he won't touch short vol products. So that's all you need to know about them.
Like we had a long there was a long running debate about that you can be long vol a lot and still be an averagely wealthy man. You can be short vol and win every single day and end up in the gutter one day.
One day.
Like
All it
that's all it
takes.
takes.
People don't
One
understand
one day.
what
Oh,
volatility is.
oh yeah. Well, people thought VAR was the standard model to do everything on too.
Yeah,
So obviously,
yeah. I remember when I first learned about that. I was like, oh, really? Is that simple, huh? And I didn't know anything about markets at that point in time. But one thing I did know was that mathematically, that shit didn't make any sense.
no, but it was so simple. How could it be wrong, right? It's so simple.
Yeah.
It can't be wrong.
Some things aren't meant to be that simple, and volatility is one of those things where it can't be corralled by humans. Humans cannot suppress something that has a natural state. That's why anytime that they do, it blows up in their faces. But
Well,
still, they don't know that.
it's the same thing with people keep telling me that markets are efficient, and I was like,
Oh
well,
my God,
if
man,
markets
let's not even go
if markets are efficient, then nothing really matters, right?
there.
Like,
Then why have a market?
yeah, then there's no
End of
market.
discussion. Anytime somebody tells me that stupid shit, then why have a market? What's the
But
point?
But that's what the VAR
What's
was
the
all
point?
like. Oh, it's just a mortgage bond, so you can leverage it up because historical rates of. And I was like,
Mm-hmm.
but you're saying that the market's 100% efficient, and you're a giant bank. Why are you in the market then?
No reason.
No reason. Like, there's no
There's
edge.
no reason for a market to exist if markets are efficient. Period. Whoever can contra that, you can freaking tweet me all you want. You know I'm bond skewed. Knock yourselves out. I'd like to hear somebody refute that one.
Yeah, it's like it's just things today are just getting more volatile, and that's what you gotta
Mm-hmm.
run with. I would love.
Straight they are.
I wish I had the numbers on what a Getco and a Virtu and the market maker with the bots we're running in these volatile times because we're not grinding up or we're not grinding down. We're actually swinging every
Up and
day.
down. Right.
Um, I'm wondering if they're making money. I'm assuming they can, but also like
Well,
I don't know if a computer.
you would hope so, because they're supposed to be market makers.
Yeah, but I'm also not sure if a computer can actually handle the
Depends how it's coded.
non-reality real world. I guess
Right.
like
It
a non
depends how it's coded.
like a non-linear situation, right? Because that's the kind of
Right.
market we're in. You never know what's going to be tweeted before everyone wakes up, and
Mm-hmm.
then
Mm-hmm.
boom, now like Harley
Toast.
Davidson's down 30 points. Why? Well, there was a tweet. Or crude crashed. Why? There was a tweet. You
Right.
got to roll with it.
Exactly. And if you look at the market, let's see here. I'm just looking at the SPX. I'm gonna throw the VIX on top of it just to see. Because the thing is, this market on the recent rotations that we're looking at downward right now, it topped out on the 12th, approximately 2 weeks ago or so. Right. But vol bottomed out a week before that. So you had, how are the algos, assuming that the algos even take into account volatility? Because I'm thinking, depending on the algo you're talking about, and I'm just thinking strictly, market making, scalping algos. Uh, they are watching the VIX, right? It's part of their job to watch the VIX because if they're not watching the VIX, they don't really have a clue what the market itself is doing in terms of rotations intraday, right? And a market maker doesn't give a shit about, what the hell the Bollinger Bands are doing, for example.
Yeah,
That's
the
not really
market makers
relevant.
don't care about the technicals. They just care about the bids, the asks, the
Price action,
item, and
strictly,
where the trend's going. That's all they care about.
right? Strictly price action, correct.
Okay.
So, you got to ask yourself, what are these guys doing when VIX is bottoming out at 12 and a half when that used to be where it used to top out at, right?
Yeah, I mean,
So
yeah,
that
we'd be
that
7 and 11 and a half would be like the sky's falling. I mean,
exactly,
remember back when like 11 and a half would be like, oh, it's a normal day. It's not 30. It's not 25.
exactly,
Like, and now it's like,
exactly. That's
that's
when
like
I
the world's
first
coming
started
to an
trading,
end.
and that was like 8 years ago,
Yeah, the VIX
right?
is
That's
the
when I
world's coming
first
to the
started
end. The
trading.
VIX is at 15. Ah.
Exactly, and that's just a joke, right?
Yeah.
If vol was bad, then why are we here? Without
Well,
volatility, we don't make money. We need volatility as a trader or investors. Doesn't matter. You need volatility.
also
So
volatility is completely priced the wrong way. Me and Greg and some other guys have been talking about that for a long time. Is people look at the VIX and they go, well, it's the fear index. I'm like, it's not a fear
it has
index.
nothing to do with fear.
You're just listening to CNBC and Bloomberg, and they have to dumb it
Mm-hmm.
down for so many people. They're like, well, it's a fear index, and then now it's
To
become
be
a
honest with you, I don't even think they're dumbing it down. I just think they don't know what they're talking about.
yeah.
That's what I think.
It's not a fear index. It's the movement. Like where's the
It's
pressure
it's
index? Like
it's exactly. It's simply a measure of variation in prices. So if you got a salt shaker, right, and you got a certain amount of salt in that salt shaker, and you want to know how dense the salt in that salt shaker is, right? The VIX is gonna tell you once you shake it what that variation is. How dense is the salt in that salt shaker? How much salt is in that salt shaker? Right? That's basically what the VIX is telling you. The VIX is telling you how hot is the pot right now, basically in terms of the S&P, and that's only because, right? Only because the natural tendency of any equity index is to go higher, right? That's the natural tendency.
Up and to the right, baby.
So, right. So what that means is, because this is very basic math, right? Because we're talking about just a simple distribution here. That VIX is doing nothing but measuring the distribution between one day and another, or 30 days, or 40 or 50. It depends on what the number of days you want to measure is. Now, the VIX itself is just a measure of the volatility priced in the VIX puts. That's it. And calls. I mean, really just at the money 30-day straddles in the SPX. That's literally it. It has nothing to do with anything else.
No, that's all it has. And I mean, like, to be honest, I don't think anyone in Chicago ever listens to this show. But if they did, and they made an index where it was called the Holy Shit Index, like good and holy shit, I think we could do that. Like, that's your fear index right there. Like,
right. That would be
good,
the fear index.
Or they feel holy shit.
And you know how I would measure that? I would measure that by the number of moves in a day that happen in all markets that are greater than 3 sigma. Because that's oh shit.
Yeah, that's logical. But, you know, why make it easy when we can make it absurdly complicated?
Right. It's easier that way, I guess.
And that's what I've like. I mean, I feel like Twitter has done a really good thing about bringing a lot of FinTwit people together, and you get, good discussion groups. You get, some fakes and whatever, but also
overall, the net
Twitter
is positive if you know how to use it.
Twitter's also brought in a horrible world of the Elon Musks and Carl Icahns just tweeting what they want about non-public disclosing information. And I complained about it when Icahn did it. When Icahn went, had a meeting with Tim Cook, told Tim Cook,
I remember that
$40 billion buyback. Tim Cook agreed. Like that.
That's a layup,
dude. You can't do that. Lose. You can't write that and just put it out there, because at the time he only had like 15,000 followers. Like, you just can't disseminate that. Elon Musk out there like, well, we're gonna do this, and then we're gonna do this, and here's our numbers. It's like you can't disseminate financial disclosures,
right? Information that's not supposed to be public until it's made public.
And then the government's like, meh, okay, whatever. Twitter's a new form, and I'm like, I guess it all changed.
Well, let somebody else do that.
Yeah. Yeah.
Pretty sure it won't go down quite like that.
No, why do they care? Why do they care that people can front run the crap out of different media and stuff like that?
The whole market.
Why
the whole market and some.
Yeah. Why catch the person who's disseminating the news when you can just catch the front runners and find them?
I mean, I think back to the UK case where they locked this one guy up. I forget the guy's name. Some Indian guy that lived in the UK. I don't even remember where it was. It was somewhere in England. I guess if I remember correctly, I think it was close to the city, but I don't remember because it was just an obvious case of making a random example out of somebody with the spoofing. I don't know if you remember this nonsense. It was like some Indian guy or something. I don't remember who the guy was, but the guy's in the UK, and the spoofing was in the SPX or some American equity exchange equity contract.
No, they arrested him and then charged him with causing the flash crash. They're like,
right. Oh, that's right. That's what it was. That's what it was.
Caused the flash crash.
So ridiculous. I couldn't even remember it because I just blocked the shit out. That's right.
Yeah, and then everyone involved was like, yes, it's that one guy. It's just him. We had nothing to do with it. No one made any money. Don't worry about it. It was that dude, that one dude, like.
Right. The lone guy with not even $1 million in his fucking account. Yeah, he caused a flash crash.
The lone guy, he has $500,000 in his interactive broker's account. Crashed the entire market.
Right. Interactive broker.
It doesn't even make sense.
Down. Right.
Just
exactly. So
that guy did it.
So when you see. Right, and they threw him in jail, and he's still locked up. So when you see clowns like Musk and Icahn on Twitter doing what they want, you can't really expect the SEC to do anything because they're out here locking up people for no reason, literally making it up as they go along.
I mean, I guess the funny thing is, I knew about the LIBOR stuff. You know, it's a French Chicago. I always knew about that, but I read the book, The Spider Network, and it was just the dudes who got put in jail were the traders who, like, it became a thing. Like, hey, where are you setting LIBOR? We're setting it here. Da da da.
Right, that's another good example.
And all the brokers who were taking commission off of it and like really forcing people to do stuff walked.
Mm-hmm.
And, you know, it was the traders and the banks.
They're all good.
Yeah, and the banks just got fines, and it was just the traders who got put in jail. And I was like, I'm just like, man, dude, but sense. Yeah, if everyone is doing it, everyone needs to pay the price. But what do I know? Not a lot.
I mean, the thing about it is that nobody in any institution does anything without being told to do it.
Yeah,
that's number one. Right.
Or
so if you're locking up a trader, you should be locking up some VP, some ED, some MD. Somebody above him needs to be getting locked up, not the actual trader. The trader's just doing what they're told. So if you want to look at it from a proper perspective, and by proper I mean as to who is actually responsible for the act, then you have to look at the party responsible for invoking that act to happen, and that's going to be the person in charge. And those are never the people that get locked up, ever. So
why would we do that?
Maybe we should change the subject.
Yeah, they're going to come for us next.
Well, you never know, man. A lot of people are made to look crazy that you've never even heard of before. So
that is true.
I would not put anything past the folks that make the rules up as they go along.
You know, like I said, it's you know, it's a grind out there, and you just got to figure out, you know, what side of the grind you want to be in.
Right.
It's going to be funny if they really do this Dodd-Frank, you know, pullback like this.
They're doing it.
Well, but they
have no choice.
But they're also saying that they're going to look into, you know, algorithmic software and what that's doing. And
they don't have the capacity to do that. If they did, or if they wanted to, let me rephrase, if they wanted to, they would have done it years ago when it was actually affecting the market. Right. Nowadays, you don't really see HFT being an issue in terms of just single stock equity trades. Like, you don't really hear anybody even complaining about that anymore.
No,
you really don't.
So it's more an issue in your world. But I was like, even if they wanted to,
before it used to be strictly equity exchanges.
Yeah.
Now
even if they wanted to bring back the pits, I don't know if there's actually enough guys.
Well, I don't think they want to necessarily bring back the pits. I think they just want to necessarily bring the flow back. But they don't realize that it's not going to come back unless you bring the pits back.
Yeah.
Because, I mean, these are people that have never participated in markets that are making the rules. So you can't expect them to actually know anything.
Well, yeah, these are all people who are who've only seen a bull market.
Well, that, and they have never participated in a market, period. And they probably are people that think that a market going one way is the only way that it should go. So when, you know, nothing in life is a straight line. But
unless you're talking about the stock market, and then it's just up and to the right. That's all it is. Boop.
Right. You know what my favorite is when they talk about when they do these tests on these indices, and then they act like a back test on the index is valid. That's my favorite, because they completely ignore survivorship bias and all this other crap.
Yeah.
Like, you can't do a back test on index and think that's you know, some type of accomplishment.
Well, I mean, and if
some type of strategy.
And if indexing was so perfect, then you wouldn't have a George Soros or a Warren Buffett or, you know, any of these guys, because you couldn't beat it. Because, and what's the point? You know, there's always.
Here's a funny thing. Here's to bring up the efficient market theory once again. If markets were so efficient, why would you need an average of anything? Because it would always be one, because it would always go up.
Yeah.
And that's it. So that's another angle to shut the EMH people down. I mean, I think I've heard that even Fama has called it nonsense up to this point, and I can't believe the guy won a freaking Nobel for that crap. But just goes
Uh,
to show how.
the the Black Scholes people won Nobel prizes.
Oh yeah, them too. I forget about them. But I mean,
Well, that's because they copied
I
Thorpe's work, and then they made a
right,
shittier version of Thorpe's work. And Thorpe was like, "Well, I mean, it's kind of an options pricing model, but you have to use your brain." He's like, "You have to be
right.
selective about it." And they're like, "No, no, no, it's just good."
No,
What?
and it's not because I've tried to use that pricing. I mean, I don't even price options to be honest. I stopped wasting my time with all that. It's just one of those things where if you catch with options, timing is everything. So if you time the trade, it doesn't really matter what your entry price is because once that market moves in your direction,
Game over.
that adverse price action against you isn't even you're not even going to remember it
Yeah,
because the price is going to adjust immediately to where it's supposed to be,
yeah,
and you won't even it won't even matter. And
and
that's the funny thing about options, and I use a time stop more than a price stop
yeah.
when I trade options, just to show how serious that time situation is.
And then the thing that people don't get about options, I trade a lot of them, is that, like I said, I mean, you can have the math there, but it has to be based upon a move. And people are like, well, options are a complex warrant, true, but a lot of the math is based upon convertible bond arbitrage, not about options
Nothing
arbitrage.
else.
So you're
Right. I mean,
taking
there is no options arbitrage
yeah,
because there weren't any options before options arbitrage came along.
yeah,
So,
like you're taking something that's based upon a bond with stock rights, and then you're trying to like overlay that onto a different market, on a market that like, and plus now we have so many different options. It's not weekly or monthly anymore. It's daily,
yeah, I can't keep up
we
with
have
it.
weeklies and then
I
like
can't
half
keep up
tick
with it.
weeklies, and it's insane.
And you know what the funny thing about that is that if the markets wouldn't have died down, if they wouldn't have killed the markets with Dodd-Frank, there wouldn't be a need for half ticks, half tick futures, half tick euro futures, for example, or daily options. I mean, it's like, why the fuck not just make the market binary? Right at this point, why not?
And
Because you guys are just
they
trying to
have binary
generate
stuff
commission
too.
somehow. Right. Because
Like,
they're basically just trying to find ways to generate commission. Because guess what? You guys killed the markets. You let HFT do what they want, do what they wanted for years. You didn't give a fuck about the customers. And now, majority of them have left because not only did you not give a fuck about the customers, but you, on top of that, killed the pit. So
yeah,
now, institutional customers have nowhere to go. Locals have nowhere to go. Locals, stop playing the game. They don't even care to play the game anymore because you fucked it up. So there's a lot of things going on that I just don't know, where things are going to end. I'm hoping for the best because they're trying kind of to corral things into to where they used to be, but it's not going to be as easy as they want it to be because these people just think you can wave a wand and sign some paper and then that's it. Shit's supposed to
well,
change, but it just doesn't work like that.
yeah, that's very true. Also, you know, when the market makers are all robots,
Right,
and
not people.
the initial plan is, because we've seen it with the flash crash and we've seen it with other stuff. They don't The companies who are making the markets, like the Getcos and whoever are making the markets, they don't understand the information that's coming out. They will no longer make markets. They'll pull all their bids and offers. They'll just turn the computers off until
Right, they just turn the machines off. They just turn the
when
machines off. It doesn't cost them anything.
when they turn the machines off of, there's no actual human market makers anymore. Then what the fuck happens?
Hmm.
Shit goes
Right.
crazy. There's no more bids and asks, except for real buyers, and there's not a lot of real buyers out there. I'll tell you that much.
Nope.
It's all a fabricated
Nope.
market. And when the
Right.
Getcos and the Virtus and you know the Laturians and all those people go there at high speed HFTs are just doing it for a fraction of a cent. When they bail, you have no market. You have people like me, you, Greg, like everyone on Twitter, like, but you have like people who are bidding 10,000 shares at the most.
Right. And that's not a lot.
Yeah,
It's just really
it,
not.
You're gonna get ping pong action. It's gonna go from like 10,000 shares down to like someone who has to have a market bait, like someone at Citi who used to be a market maker and has to keep a bid out there at like $5 for 100,000 shares. Ping pong.
Right.
Like
that's what you're gonna see. You're gonna start seeing one of those weird what do they call those? Broken ladder markets.
Yeah.
Because you got a price down here of 5 and a price at 501, and then you got a price up here at 985.
Yeah.
Right? What the fuck is in between that? Who knows?
Yeah.
And that's why they call it a broken ladder, because there's nothing to hold on to in between.
And that's what we've seen it before, and people, like
you see a lot of that in after hours equity trading. Those broken ladder type setups that I'm talking about, because the market just jumps around 5-10 cents.
And then that's why I've always told people that the market's quick to adapt, but very, very quick to forget. Right? Ask how many people know about the flash crash. What?
Yo, I can't believe that was. I feel like an old man, but that wasn't that long ago.
No, not in the term of the market on how long it's been around. Like,
that was a microscopic point in time.
Yeah, people forget, and that's why you get fat tails, and that's why
exactly.
And that's why like longing volatility is just the way to go, because I long a lot of volatility against my portfolios that I run for my family and stuff, because I don't know. I can honestly tell you I don't know what's going to happen today.
Tomorrow. Nobody does. I'm pretty sure all those guys that blew up on the Swissy franc move last year in January 2017 didn't have a fucking clue that was going to happen.
Are the dudes that blew out on the Porsche Volkswagen?
Oh, right. Or the people that blew out in October 2014 in the treasury market, and the people that blew out, like last week in the treasury market when that thing jumped like 2 points out of nowhere.
People who blew out on the VIX. I was in Cabo. I was in Cancun at the time. I didn't even know. All I got was like random text messages of you guys all laughing, and then people crying, and people saying like I'm ruined. And I was like, what the fuck is going on? And then Greg's like, the VIX just blew up to 40.
And you know what's crazy?
And the
you
VXN
could see that coming if you really wanted to look for it. That's the crazy thing.
Yeah,
you could have seen it coming.
Well, also, what was the inverse one that was linked to the TVX, and the TVX blew up? And then everyone was
remember VXX or something. I don't know, but that one was even funnier.
Everyone was like long that, and they didn't read the prospectus or whatever that like one can null and avoid the other. And I was just like, that's just bad. That's just bad.
That's what happens when you don't read, man.
If you buy something and they send you a prospectus, you probably might want to fucking read it. Like,
right.
Or know when
that's why I tell people, ETFs will be the thing that brings this market down, because people don't understand. I mean, let's be honest. How many people that participate in markets, and I'm speaking both from a retail and institutional perspective, actually understand what happens after they buy a stock or a future or a Forex or whatever the fuck it is? It doesn't matter. How many people actually understand the dynamics of buying, letting the transaction settle, and then marking it to the books? Like, people don't realize that shit takes at least 2 to 3 days. It's not instant.
3% of the people, I guarantee it. Maybe less.
Probably. Maybe less.
Maybe
less.
What about?
So when we're talking about vol products, I mean, you don't even trade vol. Like, there is nothing to back that. That's just some straight magic.
Yeah.
Literally.
But, I mean, it's the same thing like the dudes in 2006, 2007 who just cared about the yield on the MBS. Are like,
right.
Here's a perspective. Just
throw it out the window.
Yeah. What's the yield? What's the yield? 15%. Okay, cool. We're in. Like,
we'll go with that. Yeah, exactly.
Oh my god, we have no money left.
Right? How'd that happen?
No, bro.
I wasn't paying attention to my capital. That's how that happened.
Reading.
It's crazy, man. People out here really just not paying attention to anything. And when people get caught off sides, because now you have people not buying into mutual funds and going straight to ETFs, which is fine, because they're basically one and the same. Because people think that they can escape volatility by going to a mutual fund. Obviously not. You can ask the people that were in Bill Gross's Janus fund on that one. You cannot escape volatility just because you're in a mutual fund. And I need to say that there's a lot of people and some so-called professionals that think that you can, and you cannot. So if you think that you are doing the same thing by escaping mutual funds and buying ETFs, no, no. That's all I have to say to you is just no.
I have a big question. If Gross leaves Janice, then where are we going to go for the rest of our lives if anyone else quits anything?
I don't know. But that question is of imperative importance. We need to figure that out. Because then where the fuck are we going to send everybody to?
Bill Gross.
Because that's a classic one already.
Bill Gross gives me help. That gives me faith that if I ever catch an awesome trend, I can just ride it to being a billionaire and can still like not really fundamentally have a thesis that's right.
That is crazy, right?
He was wrong.
That dude doesn't even realize he just rode a 35-year plus deflation boom. He doesn't get that. However, good for him because now we know what's about to happen for the next 35 years. Straight up.
Yeah, inflation.
Unless this bad boy cracks, and by crack I mean, the U.S. dollar is no longer the reserve currency. Our debt load actually matters. You have rich people living in the streets for the first time in their, family's history. Like, I mean some serious depressionary shit. Not that crap that happened in the 30s. I mean some real live, all hell is breaking loose, government can't save nobody type shit. That is when people will learn. And by then it'll be too late. So it won't even matter. But I'll be laughing.
People aren't even gonna learn if that happens. Like, give it 30 years and we'll be back at the same shit again. Like,
well, I mean, that's why we got the 60s and 70s, and that's why the US was able to default on its currency back in 71. And yeah, August 15, 1971 was a default. Doesn't matter how you cut it, just because it wasn't debt doesn't mean it wasn't a default, because the US defaulted on all its gold-backed currency reserve, all currency.
Just because we said that we were leaving the gold standard doesn't mean it's not a default.
Right, and that was a default. That was a literal default. So the U.S. has defaulted before, and it will more than likely default again because you just can't. Right, even though we know, right, for a fact that a lot of this debt could easily be dismissed because it's on internal books, so to speak.
Yeah.
How can you make that claim when we're talking about Social Security fund, right? We're talking about all these domestic transfer payment pools of money, Medicare, Medicaid, Social Security. How are those funds not relevant, right? Because if then they're worth zero, so do you deduct all of those holdings that are in those pots, right? I mean, you got to think, because why does it not matter?
Or even more than that, like if we say we're only going to default on the debt that we own, I'm pretty sure that's going to devalue all the debt that China, Russia, and Japan own.
Everybody else has. You would think so.
I'm pretty sure the three of them are not going to be happy with it.
Right. You would think so, right? And because that's just like what happened with Russian debt in 1999. Yeah. Right. You can't say that you're not going to pay one piece and then that's it. It just doesn't work like that.
I'm pretty sure there'd be a war fought over that.
Was that?
I said I'm pretty sure there'd be a war fought over that if we were just like, oh, we're just gonna appreciate our debt, but your debt is still good.
Right. Yeah. That because that's another thing too. A lot of countries just aren't sitting back anymore and letting America just do what they want because America has abused its power that it has via the Plaza Accord.
Yeah,
basically.
I'm pretty sure that if we did that, China would be like, cool, we're gonna take Taiwan and this and Australia. They don't need anything, so we're gonna take them.
Yeah, a whole bunch of. I mean, well, truth be told, the power structure internationally speaking has already changed.
Yeah.
Right. Russia and China are at the forefront. The West as a whole just looks like a joke, and the U.S. is slowly making a comeback as Trump continues to pummel anything that the EU or the people that want to remain in the EU from the UK keep stating. And I mean, I do not give a flying fuck about any politician. I don't care if it's Trump or not. But the truth needs to be spoken, and that's all I'm about. And the truth is that no government entity has ever done anything for anybody, and they never will. The most I've ever seen done in my lifetime has been the little that Trump has been able to do in the year and change that he's been in the seat. And at the same time, anybody that, you know, doesn't understand what's actually going on, those are the people that seem to have the loudest voices, which is sad because a lot of the voices that we're coming across are also very biased, and they are not really providing any objective analysis or objective point of view as to what is happening. So what that is in turn doing is that it's creating a lot of misinformation or spreading a lot of misinformation around. And what that's causing is it's causing a lot of rage. I mean, you got people kicking random individuals out of restaurants or not wanting to serve them for literally no reason. And I mean, in the last time I checked, if you open a business, you're there to make money.
You want people to
If you're
come in,
worried
right?
about, yeah, if you're worried about, Tom and Dick sucking each other's dicks in the back of their fucking car, you're fucking up. And you're never going to get anywhere in life with that attitude. And that's a fact. Because the reality is, it's nobody's business what somebody's doing in the bedroom. I don't give a fuck if you're fucking a cat. That's your problem, not mine. And that's literally the way everybody needs to operate. And that's not my opinion. That's just a fact of life because unless you're violating children, nobody should give a fuck. It really shouldn't be a topic of discussion. It shouldn't be something in which government gets involved because guess what? You just allowed government to come into your bedroom. Good luck with that. Because now we're fucking on China's level. Oh, you can only have one baby. Oh, you can only have this. Oh, you can only do that. And it might not seem like it now, but just like it didn't seem like anything in 2011 when they passed the NDAA Act that, 12 on December 31st, 2011, when everybody was fucking getting blasted and getting fucked up, Obama was back in the cut signing the NDAA Act, which nobody talks about, which is the main tool that government will use once it decides to say, fuck everybody and the broke selves. Because what people don't realize is that government is clamping down nationwide because revenues are down. And revenues is code for taxes.
Yep.
So
Taxes are way down. Like, I
right,
mean, we're making a ton of revenue, but there's no profit, and I don't think people
right,
understand that anymore.
right. Well, and the bigger thing, just to make this one last point, the bigger thing is that the Supreme Court ruling that happened last week, a lot of people kind of dismissed it. It hasn't really been a topic of discussion, and in my opinion, it should be, because that essentially gives the state right, entire rights to essentially fuck up intrastate dealings or interstate dealings as far as businesses go. So what could ultimately happen is, for example, New York, New Jersey, California, Illinois, all these states that are basically broke and rely on socialist type setups to continue to operate, Ponzi schemes to continue to operate. They are going to clamp down hard on e-commerce, and they're going to want their whatever tax rate is afforded to them based on whatever random law they made up. And that is going to cause a lot of problems because guess what? Amazon isn't going to continue to sell, isn't going to continue to generate revenue as they once were because guess who the majority of their customer base, guess where the majority of their customer base lives? In urban environments,
Yeah,
right? People that use Prime don't live in fucking suburbia.
yeah,
They got cars and shit. They can go from BJ's or Costco to their fucking house. It's
yeah.
the smart. Yeah, it's the schmucks that live in New York, L.A., Miami, Jersey, all those places where you gotta have stuff mailed because you can't take a 2-hour trip after work to go buy some groceries because that's
Oh,
how much traffic there is and all this other nonsense.
it's true.
So
I think there's a lot more things on the state rights issues that people aren't. Gaming was just the first thing. The Supreme
right,
Court handed the right to, you know, decide if you want online poker, whatever you want. It's your thing. I mean, we're starting to go back to more of a states' rights culture here, and people aren't quite seeing that.
Right, they're not used to that. They're used
Yeah.
to daddy and mommy telling them what to do.
Yeah.
So it's a little different. It's a little different, and the states' rights is supposed to be the proper way because we're a republic. We're not a democracy. People don't even know the difference, right? People think the U.S. is supposed to be democratic, and it's not, because democratic implies that you're ruled by the majority. This is a place where the individual is meant to be free, not a whole group of people. It's not about a whole group. It's about you and yourself, and that's it. That's what the U.S. is supposed to be about. That's why you got religious freedom and Bill of Rights and all this other bullshit. But none of that shit really matters anymore because people are too busy picking sides instead of realizing that the only side that matters is their own. But enough of the politic crap, man. I mean, the reality is that if you're not fucking doing your homework, you're fucked. Period. Doesn't matter who you side with. Really doesn't.
I would agree with that. And on that note, looks like we're going to try to do this again next week, people. I'll reach out to the old cranky man and see if we can get Bob on tomorrow or Friday. You never really know. Bob's got kids, and apparently his kids cost him money, so he's always cranky with it. Like they don't pay parking tickets. You know, it's just Bob's life. He's got kids, man.
Kids are a pain.
I like that. We'll just end on that. Kids are a pain. We'll see you guys all next week. Talk to you later.